Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bearish scenario where we're looking for a three-wave structure to the downside in an ABC or a WXY, where the most common target area for C or Y is between the 1 and the 1.236, taken from the high to the low to the high over here, giving you a target area between 39.7k and 38.6k, which is in nice confluence with this golden support box here for some additional support between 38.6 and 39k. Now what you also see in this scenario is that price has hit the 886, which means any move to the downside has a higher probability of being a wave C or a wave Y, increasing probabilities that then later price is going to continue towards the upside. However, what is important in this scenario, that price is then also losing the golden pocket that we have over here, because what price likes to do quite often after hitting the 886 is retracing to the golden pocket and then continuing back towards the upside. So in this scenario, preferably you would then like to see continuation to the downside and break this golden pocket over here. If price returns to the 886 once more, it increases probabilities to just see continuation and see the highs broken over here. If we then look at this bearish scenario, we're looking for a flat. So we do expect price to move to the upside and take the highs, but then we're looking for a retracement to the downside in a bigger wave A, B, and then a wave C. The main difference compared to my previous video is that I moved this wave A from the pivot on the left to the pivot here on the right side. Main reason for this is that if this over here is your wave A and we're looking at this being a wave B, what I don't really like and enjoy seeing is this double zigzag with a wave X retracing very deep, because we were then looking for a zigzag in W, then you have an X and a zigzag in a wave Y. However, wave X here retraced really deep below the 0.7 Fibonacci, which you take from the low to the high over here, toggle on the fibs for a wave X in a sharp double zigzag in a WXY. You can see candles have closed below the 0.7. So that is why now I put the wave A down here for then a three-wave structure like this, where this is then a zigzag by itself in a wave B. And that is also a common pattern for a wave B in a bigger flat structure, where we're then looking for an A, B, C. So in this scenario, we would then like to see a bit more upside, where the target area for a wave C is between the 1 and the 1.236, taken from the low to the high to the low over here, giving you a target area between 44.7k and 45.4k, with a maximum target being the 1.618 at 46.5k. For a wave B, the most common target area is between the 1.236 and the 1.38, pulled from the high to the low of A, giving you an area between 45.6k and 46.1k. If price is going to reach this area, what we like to see is a range to start before then dropping to the downside in an impulsive structure, and then a wave 1, 2, 3, 4, 5 as wave C should be an impulsive move. And what is nice about a wave C is that usually they're very quick, very fast, high volume as well in a bigger flat structure, which can induce fear, people selling, but that is what we want to see, because that liquidity can then be used to push price back towards the upside. If we look at the bullish scenario, then this is a scenario first posted by Dasa Gaming in Discord, where he shared this screenshot over here, which is basically a WXY scenario. W, X, triangle, and then a wave Y. And this internal count and then a flat X zigzag is basically the same count as putting wave A here. Flat X zigzag finishing wave A. However, in this scenario, we are looking for bullish continuation. So here we then have the end of wave Y after wave X is then labeled a triangle. It's not a great triangle, right? Like wave C is very short compared to wave A over here as well. And if we look at the volume, then we do have a big wick here with high volume, and preferably volume is moving to the downside. But if we ignore the wick, then we do have volume moving to the downside as the triangle was evolving. So that is something. But then after wave Y, we're looking for an impulse to the upside. So we then have wave 1, 2, and then over here looking for a bigger wave 3 towards the upside. If we take a trend-based fib from the low to the high of 1 to the low of wave 2, toggle on the wave 3 targets, then we want to see usually at least the 1.618 hit at 46.5k, which is above the golden resistance area that we have here, sitting between 45.2 and 46k. So if price is moving to the upside, there's increased probabilities we might be in an impulsive move, but do not forget the same 1.618 is still a wave C target as well for a potential flat. So that is something we have to keep in mind. Now also what you see over here on the chart are the two 0.618s. And this is because we are looking for an impulse to the upside. So arguably after wave 2, you then want to see a wave 3 to the upside. So you're going to be looking for a 5-wave structure. But if we look at this structure here, then you can see 1, 2, maybe another 1, 2, and then a 3. And the reason I say 3 is because of the volume here as well. The highest amount of volume is in the high, as you can see. This increases probabilities that this is then a wave 3 in an impulsive structure, which means afterwards we want to see a wave 4 and a wave 5. If I, however, take a fib from this low to this high, where arguably this is then a final wave 2 before the big push to the upside in a wave 3, you take a fib from the low to the high, toggle on the wave 4 targets, because after the highest volume push to the upside, you want to see a wave 4, then a wave 5 made on lower volume. The 0.618 has been hit for a potential wave 4, which does lower the probabilities of this being a wave 4, and therefore lowers the probabilities of this being an impulse to the upside. Now you can play it a bit more safe, where you also take a Fibonacci from this low over here to the high, and then a wave 1, 2, 3, 4, 5, where the 0.618 is not yet hit. But if price does move to the downside and also hits this 0.618 at 43k, it really increases probabilities for the more bearish scenarios. Also, regarding this 0.618, if we look for 1, 2, 3, 4, 5, then somehow we need to have an internal 1, 2, 3, 4, 5, right? Like this one candle is a 4 compared to this being a 2. It's not looking too great. On the micro, if we look here locally, then you can see again the lower 0.618 at 43k, one to keep an eye on. If we are, however, looking for a wave C to the downside, what is not ideal is that we had an 886 retracement here. If you take a fib from the low or the high over here to this low, you can see that the 886 was tested, right? The price retraced to the 886. Not really something you like to see if we're looking for a bigger impulse to the downside in, for example, a wave C. And currently price is finding support on the 1 to the 1.236 trend-based fib extension, taken from the high to the low to the high, which is also a wave C target area. So you definitely want to break this towards the 0.618. If we look at the range, then we have found resistance at the final daily that we had. It was the daily just above my target box. Now we're ranging below the target box again. Was the final bit of resistance, and we found a rejection there. Currently working here on that value area high of the range again, which is important because if we can't break this, we'd be looking for the point of control and the value area low, with the point of control at 41.8k, value area low at 41k. You can also see the other levels that I keep an eye on the chart over here. If we then look at the CVD divergences, it's a bit of a mix locally. We both have bullish and bearish CVD divergences, so it's not really ideal to read the divergences at the moment. Arguably the bullish CVD divergences are made with quite a bigger wick over here, which is also not ideal, and we continue to make bearish CVD divergences. Also now on the chart, look how high yellow is going. Again, lower high on price, higher high on yellow, which has been a pattern over here. Lower high, lower high, lower high, lower high, and on yellow here, higher highs, as well as here on blue. So the bearish CVD divergences might have a bit of a preference over here, but the 0.618 touch below is something that is more important to me. So if you then finally look at the probabilities of the different scenarios, then on the low time frame, neutral slash, I do have a slight favor for the bearish scenarios, either a flat structure or moving to the downside directly. And on the micro, when looking locally over here, then currently being or having the 886 retracement over here, which isn't ideal, and price finding support between the 1 to the 1.236 trend-based fib extension, does increase the probabilities a little bit to take the highs over here that we have, right, taking the double top. However, if price drops to the lower 0.618 before taking the highs, right? So doing this, the probabilities will increase for the bearish scenarios and continuation to the lower end of the range, where we're going to be looking for this scenario here, right? Wave C to the downside or wave Y to the downside. And if price moves to the upside over here, if price takes the highs, then we have to wait for a range / a rejection to get clarity between the flat scenario over here and then down in C, or the bullish scenario for potential continuation. But at the moment, probabilities low time frame neutral / a favor for the bearish scenarios. On the micro though, looking to potentially take the highs, but if we drop to the 0.618, probabilities will flip. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.